Welcome to this set of 5 videos where we'll be analysing the August 2018 Strategic Case Study document. This pre-scene is based on the fictional company of Finch News Group, which is in the struggling newspaper business. So, over the course of the next 5 videos, we'll be going through each page of the pre-scene document in great detail, highlighting the main issues as they come up, relating them to likely exam issues, theories that you could use to respond to those issues on exam day from your E3, P3 and F3 studies, as well as relating them to real-life instances from the industry. So in the first video, we'll be looking at pages 2 to 9 of the pre-scene document, starting with a look at the introductory section where you're told a little bit about your role as a senior finance manager in the Finch News Group, along with some basic details as to the ownership structure and location of the company. Then we'll be looking at the newspaper industry in Borland itself before seeing the different ways in which the company generates revenues. Then we'll be looking at a little bit of the history of the Finch News Group on page 5 of the document before seeing the editorial process on page 6. Then we'll be taking a look at the products and services currently offered by the company over pages 7 and 8 before finishing out the video with a review of their 4 main revenue streams. Okay then, starting with this short introductory section on page 2 of the pre-scene document, we can see that you are a senior finance manager in the Finch News Group, FNG, we'll be referring to them as from now on, which is a multimedia business which owns and manages a mix of daily and weekly newspaper brands aimed at local news audiences within Borland, a prosperous country with a well-developed economy and highly literate population. So you're clearly moving up in the world if you've come up through all of the 3 levels for CIMA, operational case study, management case study, and now you're on the 3rd level, the strategic case study. You've gone from being a lowly finance officer to being a finance manager all the way up to a senior finance manager at this level. So you're going to be interacting with people very high up the food chain. And you'll need to alter the way in which you interact with those people accordingly. So this company is based in Borland. We have little indication in this pre-scene as to any real life country that this fictional country is based on. We do know it's a prosperous country, well-developed economy, very highly literate population, which is obviously going to be important from the perspective of demand for the newspapers that Finch News Group is churning out. So that's obviously a positive. The fact that they're in the provision of local news perhaps means that they have to deal with fewer competitors than if they were focused on national newspapers or even international newspapers where competition would be quite fierce. Because we're talking about a very prosperous country, we're talking about inhabitants with higher disposable income, but on the other side, it also means that a company like FNG will have to pay out higher wages, so that will obviously have a negative impact on their bottom line. In the next paragraph then, we're told that FNG provides news, information and advertising services to local communities and businesses throughout Borland. Through its newspaper publications, so printed publications, along with their websites and mobile applications. FNG is privately owned with 60% of its shares belonging to the descendants of the founding Finch family. So still very much a family firm. There are pros and cons that come along with that. With family firms, they tend on the plus side to take a longer term view so they can ride out short term bumps which certainly Finch News Group will see shortly, is going through a difficult period along with lots of other newspaper groups. So they can kind of ride it out, especially if they're a privately owned company such as FNG. They're not exposed to the pressures of the marketplace and of investment analysts asking difficult questions, etc., why they missed out on profit targets for the quarter, etc., so they can take a bit of a longer term view. And with that as well, with the family ownership comes a greater sense of solidarity, particularly with this company, because this business has been in the Finch family for so very long. They've been through ups and downs before, and there probably is a greater sense of them all pulling in the same direction. On the negative side of the equation, though, with family companies, you can have very bitter feuds developing. Power struggles for influence among family members can be quite bitter. As well as that, family-run businesses tend to be a little bit more resistant to change, undoubtedly, with a company that has existed for so long. As well, there are likely to be very entrenched views as to the way things should be done. And another danger with family-run businesses is nepotism, employing family members in positions of power, even though they may not be the best candidate for the top jobs. And certainly we'll see when we look at the organization chart later on that this company has family members still at the highest levels of the company. Okay, so it's a privately owned firm. There are pros and cons, obviously, with that as well. Some of the cons that I'm thinking of relate to missing out on funding in the form of equity, share issues. This is not a publicly listed company. And if you are a publicly listed company, you have reputational benefits that go along with being so exposed to the rigors of the marketplace, and you've audited accounts on a quarterly basis, etc., as a publicly listed company. And that means you really have to have your house in order as a publicly listed firm. As a privately owned firm, you don't have the same pressures. That's something of a relief, but there isn't the same sense of rigor, perhaps, that comes with being a privately listed company. You do, though, miss out on the onerous regulations and external pressures from shareholders, etc., and investment analysts that come with being a publicly listed company. So pros and cons, as with any ownership structure. So Borland's currency in the last part, we're told, is the B dollar. That isn't going to have a huge impact in terms of exchange rate risks, etc., and the necessity to hedge against those risks, because this is a company that is selling solely within one market, within Borland. And in the penultimate paragraph just there, you are told that you report directly into the Chief Finance Officer. So it ties in with what I was saying a little earlier. You're having to influence people very high up the food chain here. You advise on special projects and strategic matters. So let's discuss then the senior finance role. The senior finance manager role is going to entail a long-term focus. At the operational level, you would have been dealing with very short-term decisions. So your the recommendations you were making for the operational case study, for example, would have entailed a period of perhaps 3 to 6 months, maybe a year at most, whereas the management case study would have dealt with recommendations dealing with the medium term over a 1 to 3 year period. Longer term focus for the strategic case study, you're talking about making recommendations for the strategy of the business, and that deals with the long term. You're going to have to ensure that your people and leadership skills are well honed at this level, because whereas at the operational level, if you remember, technical skills accounted for 64% of the marks. Now they account for just 25% of the marks. There is an even split between the four skills that CIMA wants their candidates to demonstrate at this level: business skills, technical skills, leadership skills, and people skills. So you're going to be dealing with people like the Chief Finance Officer, maybe even the CEO himself, as well as a range of different stakeholders. You'll be expected to influence them. Your audience, as I said, senior leaders and maybe even board members as well. And you're really going to need to understand the full context within which your business operates. So it's no good to consider just the implications of your recommendations for the business itself. You need to think about other stakeholders, customers, suppliers, the wider local community, government bodies, etc. And relating this back then to your E3, P3 and F3 objective studies, some of the big themes that came up during those objective studies that would impact on the case study, and most importantly would be E3 recommending strategic options, but also considering the risks associated with those recommendations and those strategic options. That would relate to your P3 studies. And then relating to your F3 studies, securing adequate long-term financing and laying out a coherent financial strategy. On page 3 of the pre-scene, we're presented with the newspaper industry in Borland. So we're told some obvious, already pretty well established facts about newspapers and what they do. They are publications centering on current events, politics, business, weather, sport, health and entertainment, and also they include advertising. So we're talking here about a two-sided market, and a two-sided market is a meeting place for two sets of agents. And the agents we're talking about here are readers on the one hand and advertisers on the other. And the newspaper is a meeting place traditionally for those two distinct groups. The more readers you have, the more attractive that is to advertisers. They have more eyeballs then seeing their ads. And whereas before, advertising revenues accounted for the great majority of a newspaper publication's revenues. Now that is diminishing greatly with the advent of the internet. We'll talk about that at numerous occasions throughout this pre-scene. Also nowadays, it is very hard to capture and hold readers' attention. That's because they have so many options when it comes to consuming their news, not just traditional print publications, but a wide range of websites, and they have access to local news, international news, national news through these websites. Almost every major publication now has a print offering, a print newspaper or magazine, plus a website that goes along with it. So you have so much more competition for newspapers to have to deal with now. And it's obviously wonderful for readers, all that choice. Very difficult for advertisers, though, to capture the attention of readers. And because there are fewer readers as well of traditional print publications, they become less attractive to advertisers. There are fewer eyeballs there. So they're shifting more money online, where readers are going to websites. And this is the challenge for the newspaper industry. They have a declining readership, and that means less interest from advertisers. So their revenue streams are being attacked on two fronts there, in terms of newspaper sales for print sales and print advertising revenues too. So readers are spoiled for choice, as I said, but a wealth of information creates a poverty of attention. People have short attention spans nowadays. Their attention is being pulled and dragged off in 100 different directions at once, with the internet especially, and that makes it very hard for newspapers to capture and hold on to readers, and it makes it hard for advertisers to know where exactly they should be placing their ads. So this is one of the big challenges that we'll be talking about throughout this pre-scene. I want to talk as well about a key ethical principle you would have come across during your review of SEMA's Code of Ethics, and that is objectivity. Objectivity is a key aim for serious newspaper publications, and it seems FNG falls into that group of serious publications. They're not it seems, in the tabloid paper business. So they aim to be objective. They aim to tell the truth. And there is also a balancing act when it comes to entertaining readers on the one hand, but also ensuring that their information is truthful and trustworthy. They talk about wanting to be seen as trustworthy at numerous points throughout the pre-scene, and thinking then about threats to this principle of objectivity. There is an advocacy threat that looms, perhaps, given the fact that you have powerful advertisers, in some cases big businesses, coming and paying a lot to have their advertisements placed in these newspapers. There may be a danger that someone from high up in one of these businesses comes and wants a story to be sidelined, for example, if it runs counter to the interests of the business that is advertising in a newspaper. And that would be an example of an advocacy threat, looking to promote a position or opinion, for example, that compromises this key ethical principle of objectivity. Okay, moving on then. The first newspaper, we were told, in Borland was established in 1865, so they've been around for a long time in Borland. And typically these newspapers have been owned by local business people and wealthy families. So powerful people traditionally have liked to control information. They try to shape views, and that again creates a tension for newspapers between speaking truth to power, being one of the main aims of newspapers traditionally, and being objective regardless of the consequences, and on the other hand, satisfying the owners of these newspapers. They tend to be wealthy individuals with lots of business interests, etc. What happens in the case that a story runs counter to the interests of these powerful owners? This has been a long-running tension within the industry, and I just want you to be aware of it early on. Something could come up on exam day where there is a conflict of interest, and this key ethical principle of objectivity is being pressed and in danger of being flouted. So there were 450 daily and weekly local newspaper titles and 8 national newspaper titles in print by the mid-1990s, but we've seen a period of consolidation over the last 20 or so years, and what forced that consolidation was the breakthrough of the internet as a mainstream technology in the late 1990s. That changed the way that news was presented and accessed, and newspapers became available online as well as in print. So technology really disrupted the marketplace, and it changed readers' habits. Readers now, especially younger readers, are probably more used to going online to consume news. And they're not consuming news from the traditional newspaper publications alone. When you think of some of the biggest aggregators of news nowadays, you're talking about major technology companies like Facebook and Twitter, for example. So non-traditional producers of news content and aggregators of news content. So online versions come in 2 formats: online newspapers and news websites. So since the mid-90s, we're told that the Borland government has been largely supportive of the internet and has looked to invest significant sums of money in its technological infrastructure, so that 85% of the population now have access to high-speed internet connection. 75% were able to connect to super fast broadband. But there is an opportunity to develop this internet access even more, because we're told that in some rural areas of Borland, indeed in many rural areas of Borland, there is poor digital connectivity. So presumably they would still be relying on print publications, which a company like FNG is still churning out. Technology, though, has kept costs low for those looking to enter the market and serve wide audiences. So before, anyone looking to to make news widely available would need a printing press, etc., and there would be high investment costs associated with that. Now a website can be established for next to nothing, and you can reach a very wide audience very quickly in that way. So technology has certainly been a threat to traditional newspaper publications, but it has been an opportunity to other companies. Technologically savvy companies have benefited greatly from the opportunity presented by technology. By 2010, we're told then in the next chapter that there were still approximately 400 daily and weekly local newspaper titles in Boreland, but things have started to change recently. By the end of 2017, we're told in the last paragraph, that has fallen to 360 daily and weekly local newspaper titles. The same number of national newspaper titles with 8. There's been a 20% decline in local papers since the mid-90s. National papers have stayed the same. So the recent global recession, we're told, has had a big impact since 2010, and the rapid growth of free access news websites, applications and global internet news providers have also put pressure on traditional industry players. So they're no longer competing with national providers, they're dealing with a global marketplace. And FNG is somewhat insulated from that because they're dealing with local news. As I said at the outset, they're exposed to less competition. Big global providers are not going to be so interested in producing local news. They're more interested in big global affairs and global issues. There's been a decline, unsurprisingly, in printed newspaper circulation and newspaper advertising. The two are linked. The fewer readers of traditional print newspapers, the less attractive they are to traditional advertisers. So there's been a rethink then in terms of the operations and strategic direction for newspaper groups. And then a word on circulation, which is the number of copies that are distributed, but readership can actually be hired because you might have 10 newspapers circulated, but you might actually have 20 different people reading those newspapers when they get passed around among friends and among family members. So readership is generally higher. It's just something to bear in mind. On the next page, we're presented with the different means of generating revenue currently for the industry. So traditionally, it was all about printed newspaper sales and related print advertising sales. Those two have been declining in a big way in recent years. And what has started to happen is that digital revenues have come in. So newspaper publications have all the big ones have established equivalent websites as well for their news stories to be hosted on, and they're selling digital advertising space as well. The problem is, though, that digital revenues are not making up for the fall in print revenues. The Pew Research Center, for example, did a study and found that for every $16 decline in print revenues, so that's related to print newspaper sales and print advertising sales, there's been just a $1 increase in digital revenues. And that is a trend that we will see play out for FNG when we look at their financial statements. Their digital revenues are increasing very solidly, but they're not replacing the traditional print revenues that are also in rapid decline. So how else then are the newspaper businesses making money? Well, from contract printing. So they have large printing presses, a lot of these big newspaper publications, and they carry out printing for other publishing businesses. And we'll see that FNG is doing that themselves. And event hosting, which involves advertising, organizing and hosting local events such as award ceremonies, sporting events, fashion shows, etc. There can be ticket sales related to that as well. That's an opportunity for FNG because they're not currently doing that. And just to go back then to advertising sales, normally it's split into two categories. You have classified ads, which are small advertisements chargeable per word, and they relate to headings such as public appointments, property sales, etc. They tend to be a major feature of local newspapers such as the one FNG is selling, and display advertisements which promote goods and services, and it's usually large companies that are interested in placing those ads. When we turn to the history of the Finch News Group, we'll see that it goes way back, founded by Eli Finch in the early 1880s as one newspaper. Unsurprisingly, Eli was a prominent local businessman and landowner, in keeping with the tendency for very powerful business people to own these publications. So by the turn of the century, we're told that the company had one printing press, but 4 daily local newspapers and 2 weekly local newspapers in the north of the country. It has since expanded into all regions of the country, and these newspapers were told had a circulation of 500,000 print copies per week. Over the next 50 years, we're told, into the 20th century, the first half of the 20th century, the Finch family exploited the growth in the newspaper industry. So this would have coincided with growing prosperity, economic growth, and increasing literacy throughout the first half of the 20th century, particularly in Western, more developed countries. What's happened though now is there has been that demand has kind of reached its high point for a lot of these more developed economies, for example, because everyone now reads. That wasn't the case 100 years ago. Also, you have had stagnating wages, particularly for the middle class, over the last 20 years, and certainly since the global recession of 2007-2008. That has certainly affected demand as well, and appetite for investment in general. And also, birth rates have certainly been leveling off for quite some time in developed countries. So with little growth in terms of the total population and nowhere to go in terms of literacy rates, demand has come down and leveled off completely in recent times. Though, first half of the 20th century, lots and lots of growth, and the Finch family certainly exploited that. They mainly grew through organic development, opening up new daily and weekly newspapers when they saw fit, but occasionally they would make an acquisition, which is a more aggressive form of growth. There is ongoing consolidation within the industry, so it does make acquisition a possibility for the Finch News Group, but we'll see when we look at the financial statements that there are limitations in terms of financing. It's going to be tricky to fund big acquisitions for the Finch News Group. They don't have many options. So by the early 50s, we're told that FNG was well established. So certainly it has staying power, it is name recognition, and that's very important in an industry where trust amongst the readership is vital. This is a company that's been around for 140 years or so, and that has let it build up significant name recognition amongst the public in Borland. FNG, we're told, made its final acquisition in 1992, so really a long time ago, which ties in again to what I was saying. It's a potential exam issue, perhaps, an acquisition for the Finch News Group, but given the fact that their last one was so long ago, and given the fact that they have been in decline for a long time and don't have many financing options, I don't think an acquisition is the most likely means of growth for this company. Having said that, though, Finch News Group is due some credit because they have maintained the same number of newspapers for a long time, 30 daily and 10 weekly newspapers in the early 90s. So that accounted for 9% of the total for local newspapers. And that has actually stayed the same up until the end of 2007. They still have 40 local newspaper titles in total. That actually now accounts for 11% of the total. So they've done well to hold their ground and increase their overall share of the market. So the first signs of decline were witnessed in the late 90s, surprise, surprise, with the advent of the internet, which we've discussed already. And a rather typical response in keeping with the industry response at the time, FNG took a pretty relaxed approach to responding to this challenge from the internet. It didn't really do much initially, just cut some costs in a moderate way through the closure and consolidation of some of its smaller offices, and offered some staff the opportunity to take voluntary redundancy. So no drastic measures being taken there. However, by 2010, it became very obvious that the internet was here to stay. It wasn't just another fad, that it was leading to a fundamental overhaul in the way people were consuming their news, and it was putting serious pressure on the ability of traditional news groups to generate revenues from their the same old activities. So one of the things that the Finch News Group did was remodel itself as a multimedia news organisation, and that actually opens up the options for the company. They could go into TV or radio, or dip their toes further into internet businesses. They already have websites and applications related to their news businesses, so it gives them more scope for growth and extension of their product and service offerings. They also renamed themselves Finch News Group rather than the Finch Newspaper Group, which they've been known as before. So they developed websites and mobile applications, and FNG, we're told, has continued to invest large amounts in digital development. The problem is, though, that revenues continue to decline, and the question is, when will returns really kick in from all of this investment? At the end of 2017, they have the same number of papers that they had back in 1992, so credit is due to them for that. Operating from 30 offices, and all 40 of the newspaper titles have their own websites, and some have mobile applications and social media accounts. We can ask the question at this stage whether there is justification for each and every local title to have its own website. Is the readership sufficient to do that? When we see later on, we will actually see that I think there is actually justification given the high number of visitors to these websites, about 10 million in total. So it does seem that there is justification for individual websites for each individual newspaper title. The broad coverage that the company has with all of these newspaper titles scattered throughout Borland means that they still remain attractive to advertisers. Advertisers are interested in network effects. The greater the readership, the more advertising dollars will be coming in to chase those readers. So that is, it still seems that FNG is an attractive proposition for advertisers. There's a strong family ethos still. Interesting that there's mention of that. It could mean maybe that family members are meddling in the day-to-day operations of the business. Is there an outsized influence still at play with the Finch family? It mightn't necessarily be a good thing. They have 60% of the ownership stake in the business still, so the majority shareholding, and there are a number of family members still present in the higher rungs of the organisation. The next section then tells us about the editorial process, which is a rather traditional approach to the editorial process. So the content of newspaper varies, but generally it combines news articles, opinion pieces, and advertising. And in the case of FNG, they employ local journalists, and they are led by a team of editors. So editors have a very important role to play here. They set the agenda. They have to balance commercial interests and commercial considerations. In other words, advertising and the placement of advertising, and how much of a newspaper is actually filled up with ads and how much is actually filled up with content in the form of newspaper articles, opinion pieces, etc. So another tension, the commercial considerations and the reporting integrity considerations, which we've touched on a little bit before. So they have to balance making as much money as they can with the more public service orientation that a lot of big newspaper groups still have, this sense of serving the community with accurate and trustworthy information. But it does seem from this second paragraph that advertising considerations do come first and content comes second, because what happens is the amount of editorial content in an edition is based upon the advertising space that has already been sold. So it seems to indicate there that is where the priority of the business lies. It is a business after all, FNG Group. They want to make money from advertisers, and then they worry secondly about content. So the process runs then as follows. News journalists submit a report. There is a rewrite journalist that kind of touches up the report, fine-tunes the wording of the story to make it more presentable to the reading public. The news editor then comes in and makes a final decision as to which stories actually run based on their relevance and based on the amount of space that's already been taken up by the advertising. And then the story is sent up to the copy desk with guidelines as to the length of the articles, the headline instructions, etc. Then a makeup editor will come along, and they are responsible for the overall style of the presentation of the newspaper. And a dummy then is presented. The newspaper editor looks over the dummy, and it's sent on to the composing room for final preparation when the content has been finalized and the dummy is ready to print as the final version of the newspaper. Just going back to that first paragraph, perhaps there is an opportunity to cut some costs by employing freelance journalists rather than having all of their journalists on the books and to have to pay them a fixed salary. However, it's going to be complicated by the fact that there is a trade union for journalists in Borland. That will make it more complex in terms of laying off journalists when it becomes a necessity perhaps for the business. And it also is more likely to ensure that journalists have pretty good conditions, so it presents certainly a challenge for the business. So print newspapers, 40 being produced, all local. Some of them are weekly, some of them are daily. And we're told that they vary from a few thousand per day for some of the dailies to approximately 22,000 per week for the largest weekly papers. And below we're presented with two tables with the top 5 weeklies and the top 5 dailies. You can see that the circulation for the weeklies is higher than for the dailies. And it's interesting to note that when you add up the totals, that overall the decline from 2017 to 2018 in terms of circulation is about 4% for the weeklies and also 4% for the dailies, so they're declining at the same rate. There does seem to be, though, looking at the individual papers, some steeper declines for the daily papers. For example, the Southern Gazette fell by 6% in terms of circulation over the last year, whereas the Mercury as well fell by 7%. The biggest decline for the weeklies was the Northlands Post, 5% decline over the last year. So maybe there are some dogs to divest there. Thinking of your E3 studies, the Boston Consulting Group Matrix, which considers the growth for certain products and the market share that the company has for certain products. So certainly a consideration for the company. Do they want to halt the production of some of these print papers? Do they want to sell some off, for example? There was only one increase in the last year. That was the Morona Daily Star, but very much an outlier, it seems. For digital products then, we're told that the company is now active with websites, mobile applications, and they're present on social media platforms as well. So they're duplicating their content there. There are 40 news websites. So each and every paper has a corresponding websites, and 18 tablet and smartphone apps. So maybe there's an opportunity to develop some more applications there. We're told that there are 10 million unique visitors for the websites. So I think that justifies the existence of a separate website for each and every newspaper edition. We're told as well that there is a software system that furnishes both the printed and electronic versions simultaneously, so there's no need to manually update the content on the website. Once it's been updated for the print edition, it's updated for the website too. So a degree of automation there and savings on cost for the company, but that software system would have required a big investment. The advantage, of course, of the website is that it can be updated throughout the day, whereas with the print publication, you have to wait until the next day's newspaper to have an update. We're told about users being identified through cookies and unique passwords on the website as the business moves more of its content online. And it has more website users. Data protection for its users is going to be increasingly important, and that is one of the key risks that the company identifies. Later in the pre-scene, we'll be looking at a risk register and talk more about that. Some newspapers, we're told, are erecting paywalls to generate some more revenues. And this is not something currently being done by FNG. So presumably their website content is available for free. With paywalls, of course, you're going to have lower volumes, but because you're putting a price on what you provide online, you're perhaps making it more valuable in the consumer's eyes. After all, you tend to value what you pay for. As well as that, it creates switching costs. Remember, we were talking about trying to capture the reader's attention. They're just flitting from one website to another. Well, if you can lock them in and have them pay a price for yearly or monthly access, then they're more likely to come back to your website and to make use of it and not be jumping around between different newspaper titles and website publications. So there's an opportunity there for FNG to consider. We should distinguish between different types of paywalls, because there's a hard paywall, which is you protect everything you produce on a website and put it behind a paywall, so that if a user wants to access any of your content, they have to pay. Then you have milder forms of paywall. So there's a metered type where you have a number of articles given away for free over a period of a week or a month or something like that. And then you go beyond 5 free articles or 10 free articles and you have to start paying for that. Then there's a freemium model where most of your material is actually given away for free on a website, and there is some exclusive content protected behind a paywall. So it's important to distinguish between different types of paywall, and that is something that FNG could usefully consider, at least if they're looking to make some more revenues. Contract printing then is an interesting area. FNG operates 2 modern high-speed printing presses at 2 sites. One is located in the north of the country, another in the south of the country. Each print facility, we're told, runs 24 hours a day, 7 days a week, and is operated by highly trained and skilled staff, which presumably would make them quite expensive to employ. Spare capacity is being used, we're told, for contractual work. So you'll have another company come with a need to publish materials, and FNG provides those services, and as a result they're operating their 2 print presses at full capacity. So this is a growth area we'll see later, and I think there is actually a possibility to enhance capacity, either open another print site or to install additional printers at their current print sites. And I want to finish out this video with a look at the revenue streams for FNG. Currently, they rely on newspaper sales for 25% of their revenues. Print advertising sales still makes up the majority of their overall revenues, with 53%. However, that was 57% in 2017 from a higher revenue base as well. So it's been declining in a big way. Digital advertising sales represent just 15% then of the total revenues. However, it was just 12% in 2017, and contract printing represents 7%. So the growth areas at the moment are digital advertising sales and contract printing, but overall they represent just 22% of the total revenues, and the big areas representing 78% of the total revenue still are in major decline: newspaper sales and print advertising sales. So the business really is enduring quite a tough time. Printed newspaper sales, traditionally the foundation of the revenues for the company. They churned out large volumes, and because they had such a high number of readers, they were very attractive to advertisers. So the more readers, the more attractive to advertisers. And with declining revenues for newspaper sales, advertisers become less interested. So those two revenue streams are tightly correlated. One declines and the other declines as well. So they're declining in conjunction. And they still haven't managed to replace those declining print revenues with their digital revenues. So the rapid growth of free web-based news alternatives, we're told, has caused a decline in print advertising revenues. Advertisers do seem to have more options than ever, because we're told that a lot of advertisers are moving their ads online to meet the audience. As the audience shifts online, they have access to a wider and more targeted interactive audience at a lower price online. So it would seem there that advertisers have kind of won out with these breakthrough internet technologies disrupting the marketplace. I do think, though, that they have a challenge on their hands, given the fact that attention is so very dispersed now. Back in the old days, you had just a couple of gatekeepers in terms of attracting readers' attention with the big newspapers, so it was easy to know where to put your advertising dollars as a business. Now it's hard to know, because you have so many different sources of information, and attention is so dispersed. As I said, it gets hard to know where to put your advertising dollars. Digital advertising sales are growing year on year for the last 6 years, which is certainly good news, but they're starting from a low base, so it's going to take some time before they get anywhere near reaching the same level of revenues as print newspaper sales and print advertising sales. Also, consider that FNG serves local markets. They're likely to be dealing with local, smaller companies for these local newspapers, and those companies are likely to have less technical know-how, so they might be slower on the uptake in terms of placing digital ads on FNG's websites. So what FNG could do is offer them some support, ensure that they have a well-staffed IT and digital team, and that they're supporting these businesses. And contract printing, as I said, I think there's an opportunity to develop this, given the fact that they seem to have a first-class in-house printing capability that's running at full capacity. It's proving attractive, and it's growing. Unlike several other companies, though, the company is not currently earning any revenues from event hosting, which we mentioned earlier on, and I think there's an opportunity there for the company to make some additional revenues. Just a word then on established newspapers. They're actually proving quite attractive to investors, surprisingly enough. Everyone assumes that the newspaper industry, traditional print newspapers, are in irreparable decline and they're going to disappear completely. And that is actually not so. And one of the major reasons is because they can be bought for an absolute fraction of what they used to go for. Consider this example. John Henry, who's a very famous American investor, the owner of the Boston Red Sox and Liverpool Football Club, he bought the Boston Globe, which is a major American publication, for $70 million in 2013. That was sold for $1.1 billion in 1993, 20 years before. So he's getting that for far less, maybe 7 or 8% of 7% of what it went for before. So there are bargains for investor to pick up some of these very established, prestigious newspapers. They still have big audiences, and they still represent an attractive proposition for many investors. So could it be that FNG could be an attractive proposition for investors for a takeover. What if FNG wanted to resist a takeover approach? This relates to your F3 studies. They could try to persuade their own shareholders that it is not in their interests to sell. Well, the shareholders are the family members of the Finch family. As I said before, they're likely to be taking a long-term view. The company's been in the family for very long, so there might be a sense of solidarity there, and they can fend off an offer if the family members don't fancy it. They could look for a white knight, look for an alternative investor if the investor that comes along isn't particularly attractive to the shareholders. Or, they could enact a management buyout. It's more in the case of a publicly listed company. This is a private company.